Now, we've got a very interesting guest here, attorney Benjamin Blakeman, who's been dabbling in the stock market his whole life and understands the ins and outs of the stock market. How are you doing today?
Well, I'm a lot poorer than I was yesterday because I paid taxes.
Oh, I see.
So I'm not in the best possible mood, but I'm doing okay in the market.
Yes. So, of course, you've sorted out this algorithm for the stock market. Just tell us a little bit about the algorithm.
Well, a number of years ago, it became possible to create your own charts on the internet and utilize all kinds of different indicators. It was previously, before the internet got really, really sophisticated, about 15 years ago, these sorts of things had to be done by hand. So if you're in technical analysis and you want to do a chart and you want to try out different indicators, it just wasn't possible until about 15 years ago.
Yeah.
And it's become more and more and more sophisticated. And, that was something I was always interested in. So I started working on it back in 2014, working on a method to discern which way a stock was likely to go based on the performance of these indicators. And then I had to pick out which ones I wanted to use. And I went through a lot of changes over a period of years and finally came up with something that seems to work pretty well.
Yeah. And is this something that takes a while to come up with then?
Well, it took me a while to come up with it. If I just showed it to somebody and told them how it works, it wouldn't take very long at all.
Yeah, that's true. And I suppose because it's taken a while, has the environment changed maybe in the stock markets? Have you had to maybe adapt along the way?
Well, the idea behind it is to create something that will work in all possible environments.
Ah.
So since 2014, we've had lots of different types of markets.
Yeah.
And it does not work with every stock or with every exchange traded fund or with every index, but it works with a lot.
Yeah.
It works very well with a lot of different stocks and exchange traded funds and indices. I back test everything for 10 years before I put it on my screen because I want to make sure that this thing has worked consistently with whatever it is that I'm tracking.
Yeah. And how do you actually manage to make it work consistently?
Well, I use about 7 or 8 different indicators all at the same time. And they give me an overall picture as long as, at least more than half of them are giving me an indication that a stock is going to move in a particular way, either up or down. I can usually trust that.
Yeah.
If I just have 1 or 2, and the others are kind of pointing the other way, then I can't trust. So I still have to do my own analysis. And it might be possible to do an algorithm that gives me the total of all of the indicators, but I'm not sure it would really help.
Yeah. So why do you think there's a need for an algorithm like this right now?
Well, I think there's always a need for it because people that are considering buying stock want to know if it's likely that at the point they're trying to buy it, that it's more likely to go up than down, or if they're trying to sell it, more likely to go down than up.
Yeah.
You can lose a tremendous amount of money if you're wrong. If you buy, there are some stocks that trade at, $4,000 a share. You buy 100 shares of a $3,000 stock, that's $300,000. If it goes down 10%, you've lost $30,000. Most people would consider that to be a substantial loss.
Yeah, absolutely. And is this service easy to use?
Well, yeah, it's very easy to use because what I do is I send people an email telling them what I'm doing. And, the email goes out within minutes after I initiate a trade one way or the other. So it should be quite easy to use, I would think.
Yeah, absolutely. And what would you say the difference is with your system compared to maybe a lot of competitors offering a similar thing?
Well, it's hard for me to answer that question because I don't really subscribe to a lot of different services. But I can tell you the one I do subscribe to, Investor's Business Daily swing trade service, mine works better than theirs does.
Yeah.
And I have, and theirs costs more than mine. But, I have actually an interview scheduled for Thursday with one of their technical people who's very interested in my algorithm because it could keep them out of, trouble. Some of their trades just don't do well and lose money. For some of my trades lose money too. I don't want to try and tell you that they're all profitable. They're not.
Yeah.
But the idea is to, when you're managing a trade, is to keep your losses to a minimum and let your gains run. And that's how you make money.
Yeah. And you say that yours works better, but it's cheaper. Should your price not be higher if it is better?
Well, it should be higher, but they have, it's a question of who has the ability to promote themselves more effectively.
Yeah.
And on that ground, they're way ahead of me.
Yeah.
So, yeah. So someday, if I get enough subscribers, I will raise the price because I think it's worth a lot more than $40 a month.
And would you say that you benefit from being a member of other services?
That I do?
Yeah.
Well, I signed up for that one just because I wanted to be able to compare it with what I was doing. And it's useful in that sense.
Yeah.
But if I had to check a whole bunch of other recommendations by other people and services, my mind just doesn't, I don't have enough cells in my brain to follow them.
Yeah. And what do we actually get for that $40 a month?
What do you actually get? Well, you get an email whenever I do a trade. And I don't do trades every day. Most days I will do some kind of trade, but not every day.
Yeah.
Whenever I do a trade, in or out, whenever I buy something or sell something based on my indicators, I immediately send out an email to all the subscribers. That's what you get. But in addition to that, you get a weekly newsletter which describes how I see the market generally, both from a fundamental viewpoint and also from a technical viewpoint. And I have a lot of subscribers to the newsletter that tell me that they really look forward to reading it every week.
Yeah. And the newsletter is called Oracle on Wilshire, isn't it?
Well, that's my alias.
Yeah.
But the newsletter is just called Market Notes, and it's got it's dated every Saturday, but it goes out on Sunday morning.
Yeah. And why did you decide to call yourself the Oracle on Wilshire as your alias?
Well, I'm a lawyer in Los Angeles. My office is on Wilshire Boulevard, and I've had, in the course of my career, I've had 10 other offices, all of them on Wilshire Boulevard. Well, no, I've had some that weren't on Wilshire Boulevard, but the great majority were, from one end to the other.
Wow.
And so that's why.
Yeah. So do you not really want to move out of that street? Because then you can't really use that name anymore.
Well, I could still use the name, but, it happens to be the street where more lawyers' offices are located than any other street.
Yeah. And what is your personal background in stock investing?
Well, I started becoming interested in investors when I was about 15, I would say. And I traded stocks, I've traded commodities, I've traded rare coins, it's just been a lifelong interest of mine.
Yeah. And what would you say is so interesting about it?
I don't know. I've always loved numbers. I've always loved statistics. I've always been fascinated by trading. I can't explain why I love numbers, but I do.
Yeah.
And my practice, my law practice, also has to do with investments, but it's life insurance. So that's where my aim was to begin with. Yeah. I also was a financial advisor for about 7 years. And I was an options principal and a general, a securities principal at two different firms.
Wow. You really love numbers.
I do.
And have you ever done anything that doesn't involve numbers?
Well, sure. I mean, a lot of cases that I had in the past didn't necessarily have to do with numbers. I mean, there were legal cases, and there are lots of things I do that don't have anything to do with numbers. But, numbers are a lifelong obsession.
Yeah, absolutely. And just some advice for maybe new investors here. What do you think the biggest mistake people make is when they're starting out?
Well, of course, different people make different mistakes, but the most dangerous mistake people make is that they overestimate their ability to successfully trade, and they underestimate the amount of, or they underestimate the amount of losses that they would be subject to and how they would respond to those losses if they occur.
Yeah.
And they wind up losing much more money than they should in a lot of cases because of those reasons. And it's very, very important to think about when you do a trade, think about under what circumstances you're going to exit that trade and decide that before you place the trade.
Yeah, it's interesting because maybe when people are starting out, they're perhaps a bit too optimistic. And do they take more risks, maybe?
Well, it's not only that they take more risks, it's that they don't understand the risk that they're taking. And that's very dangerous.
Yeah.
I mean, for example, I saw in the Barron's, which I read every week, there is an option column. And at one point, a couple of years ago, the person who writes that column had recommended the sale of a naked put option on, I think it was Amazon, but I don't remember what stock it was, but it was a very, very high price stock. And you could get $10 for selling a way out of the money put option on this stock. And I saw that it was in a downtrend, and I was beside myself. I couldn't believe he was recommending people to sell this put option, because what happens is, in a situation like that, your downside risk is much, much, much greater than your potential gain on the trade. And if you are short an option at $6 and it goes to $50, that means you have a $44 deficit on that trade at that point. And most people would freak out if that happened.
Yeah.
And that is, in fact, what did happen.
Yeah.
So...
Yeah. And what would you say are perhaps the best ways to know that you're doing the right thing? You're not leading yourself into a very dangerous corner, maybe?
Well, a lot of brokers, in fact, probably most brokers that offer options now create, they give you tools that will let you model the trade that you're doing, whether it's stock or options or no matter what it is. You can run a model that will show you exactly how that trade is going to perform, and they should always do that.
Yeah. And when you're starting out as well, what kind of things should you invest in?
Well, I mean, that's not for me to say. I mean, there are a lot of many different things that you could invest in, and it depends on your objective, your investment objectives, your risk tolerance, and your time horizon. Those three things will determine the suitability of any particular investment. I mean, I do litigation on the issue of suitability, so it has to be something suitable to whoever it is that's doing the investment.
Yeah. And do you think that the climate has changed in people seeking support and helping to invest in the stock market?
Oh yeah, it's definitely changed. I mean, there's much more information out there, and you could go to the Google, and you could go to YouTube, which is owned by Google, but and put in any question that you might have about the stock market, and you'll find a YouTube video. All of the brokers have a wealth of materials that you can read and study, and they also have webinars. And I mean, there's so much information out there, it's just mind-boggling. Some people just don't have the patience for it, and I understand that. But if you're just starting out, there's something else you can do too. They have shadow accounts. They have, trial accounts that you can open in without any cost whatsoever and without any risk whatsoever, and try out something that you're thinking about doing just to see if it works.
Yeah.
And you have absolutely no chance of losing even $1 by doing that.
Absolutely. And there are so many tools out there now. I guess you wouldn't have been able to predict that right at the very start, could you?
Well, it depends. I mean, there have been a lot of tools for quite a long time. But prior to, like 2000, 2005 or so, they just weren't nearly as effective.
Yeah.
Or as wide ranging, and there weren't as many of them. There was a huge bear market in 2000 that started in March with the NASDAQ, where the NASDAQ over a period of, I think it was 3 years, it lost 80% of its value.
Wow.
And those stocks were, going crazy in 2000. Nobody knew what to make of it. They were selling it. I mean, Qualcomm, one of the most famous, went from $20 to $800 by March 2000. And then it started to go down, and it kept going right down until it went back to in the 20s. Lost all of that back. And if people didn't know, if they didn't have an exit strategy, they lost a ton of money.
Yeah. And what do you predict will change for the rest of 2022 for investors?
Wow. I mean, that's very, very difficult to say. I think that this is going to be a very volatile year. You're in a rising interest rate environment, which we haven't been in since 1981. So almost nobody, in my opinion, really knows what's going to happen. The Federal Reserve is raising interest rates, but the market is also raising interest rates. And that means that stocks have to be revalued at a lower multiple because of the inflation and because of the high interest rates. So I think it's going to be a very difficult market. It's going to be a stock traders market or a stock pickers market. And, I just think you have to be really, really careful and conservative for the rest of this year, probably.
Yeah. Well, where can we sign up for your newsletter and also the algorithm as well?
Yeah, just go to oracleonwilshire.com.
Great. Well, many thanks for joining us on the show today. It's been very interesting to talk to you.
Thank you so much.